This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil with Invest Like a Pro. What I want to do today is talk about MACD and MACD divergence. I think this is one of the most misunderstood patterns out there, and I want to clarify a few things, at least in the way that I use it and how I've incorporated it in. I learned from some really smart guys early on, and you got to be very careful about comparing MACD peaks from too far apart. So let's go ahead and get into this example because I want to explain how I think you can save yourself from taking some losing trades or under the assumption that there's a problem developing when there really isn't. So I've got the chart of Mobileye here on a daily, and I want to start with this trend line break because we have a peak here in price and we have a peak in MACD, and you can see how the MACD has dropped back pretty significantly relative to this prior peak. Okay, so here's this bottom. That's where MACD is now. This is where this is. Here's price peak, and then we made a low here and a low here. Now, what's interesting is this is actually another pattern that I have discussed, which is a reverse divergence, but I don't want to go into that today. What I want to look at is the moment this thing breaks out and we get basically a new high in price. All right, now let's just look at this. We've made a new high in price, and MACD is way down here. Most guys that I hear from, most of the questions I get is a misunderstanding of this. They believe this is MACD divergence. They're instantly thinking this is failure to confirm on a momentum basis. But that is not true, at least not in my opinion. So the way I look at it is if we go through a correction phase, and a lot of times you can tell by the price, because if the moving averages have come together and basically we have them far apart here where there's some distance between them, and then they work their ways together prior to going to a new high, then you have to sort of assume we have a reset in place. Reset means we ignore everything to the left when it comes to divergence. We're not looking for divergence prior to this level here. What we're going to do is we're going to make this go up, pull back, go up, pull back, go up, pull back. And every time it makes a new high from here, we're going to compare these peaks. And if you notice, we had confirmation all the way to the top. There was no MACD. MACD did not show any divergence in the pattern. However, if you want a more sensitive way to look for divergence, you can look for a histogram divergence. And if you notice, we have a mountain here, and it kind of works its way down. Now, I actually like it better. I mean, the best divergences are obviously when this crosses over, and that's where this is crossing down as well. The MACD line is crossing down below the signal, and then it comes back up and makes a lower high this way. And so we get a valley, a little red down here, and then it comes back up and it makes another mountain that's lower. All right, so that to me is the better divergence signal at a peak. But this does qualify from a shorter term standpoint because I have two distinct mountains, two distinct peaks that have developed, right? A lot of times you get this just keeps dropping like that and price keeps pushing higher. I don't like that as much. It's definitely subject to more false signals. I mean, you can get little minor pullbacks from that, but then I tend to see more follow through from that. So that's one thing I do want to have you on the lookout for if you're at a peak. Now, when I look at this type of stuff, I'm actually not focused of this at all. I'm looking at the price action, and I'm seeing this moves up, and then look at this huge green bar. Now, we're getting stretched away from the 18 at this point, but it just went through a consolidation phase. So what I want to see is what happens after the green bar. And what I've told you guys a lot, even if you have a big run to the upside and then you get a monster bar to the upside, I kind of like to wait and see what happens on the following bar. If you get it follow through right away, then I'm probably going to exit. If you get a bar like this, it's telling you indecision after a big bar. You take out the low of that little bar, then you got to be thinking we're probably making some kind of a peak. So that's just a little bit of added info there. I wasn't really going to go into that, but I wanted to point that out because I know a lot of guys are looking at the histogram, but I'm more focused on the price action when I'm looking for an exit. But this sometimes can help. All right, let's go back to our discussion on MACD. So we have a reset. Now, there's another way to look at this. I know I've told you that the moving averages come together, but if the MACD has worked its way back down towards the zero line, right, then I consider this a reset. All right, if the ADX, this can be a really helpful tool. You see how this looks like kind of like a zero line reversal, but it hasn't reached the zero line? Well, when that happens, go and check and see what's going on with the ADX. If the ADX is low, below both DI lines, and in this case, all three lines are below 25, then I'm feeling like we have to use a reset. Now, same thing holds true for DI. You start over and you're doing the same thing. Now, this sort of showed some signs of divergence at the peak. This was the high of the DI here at this peak, and then we kind of made another new peak here, and it didn't quite confirm. Now, this made a slightly higher high, but this was lower as well. So we already had signs of divergence with the first peak, and then we made one more high here and never got above the original one. So the other thing you can do with DI is look at these lows. So what I'm trying to tell you is with MACD, you can use the ADX to help you kind of determine when you can do a reset. You can look at the zero line to help you determine when there's a reset, and you can look at the moving averages. When you have that taking place, then you can take a hard look and start over. You basically start over and don't look to the left. Now, before I get into the next example on this chart, I did want to make mention that I do have a course, a trend and momentum course, and this week the plan is to add to that course, which is $100 a year. I'm going to add to that course by putting in a swing trading module. So that is I am planning on releasing that this week. I think if you like this type of information, I think you can get a lot out of this. You can certainly start with the book, but I think there's so much detail in the course that they work hand in hand. I would buy both for $115. Basically, buy the book for $15, another $100 for the course. You are going to get an in-depth, really detailed information on ADX, MACD, how to use them with price, how to look for price structure, how to use momentum in your favor on pullbacks, how to buy breakouts, all that kind of stuff. All right. So as we move on here, let's look at the rest of this chart, because this is a good example of how it's basically started to reset here, and then we did make a higher high versus this peak. We can compare that. So there was no divergence there. Then we pulled back and made a lower high here, but we also made a lower high here. So there's no divergence there as well. What's really going on is this working sideways here, and this is trying to work its way back down towards zero. Now, we made a higher high at this point. This is a higher high, and we're making a higher high here versus this peak. There's no divergence here. We can't go back and say, if this happens to go to another new high, and this is way down here, we have divergence. It's too far apart. Look, the window that you want to focus on is about 8 to 12 bars, typically, around 8 to 12 bars. So 8 from peak to peak, look at around somewhere in that 12. Sometimes it can go up to about 15. But the optimum distance between the two peaks for MACD divergence tends to be in the range of somewhere around 8 to 12. Now, you could have a more sensitive MACD that will give you a little bit more definitive numbers, but I like my signals. Everyone asks me, do you ever look at other versions of this? I don't want to change something that works really well. If you look for standard divergence the way I've described it, if you look for reverse divergence the way I've described it, you look for pinch plays, you look for zero line reversals, you start adding all those together, you get a lot of really nice signals using the MACD, certainly supported by the ADX. All right. So if you have any questions, go ahead and post them. Thank you.